Good morning, Paul Georgie from Allendale. It's March 2nd, 2011. Well, markets this morning looks like we're going to start out higher on corn, beans, wheat possibly. It's steady to a little lower here at 7.15 in wheat, but looks like everything should have a firm tone to it this morning, and a lot of this is coming from the outside markets. You've got crude oil up 137. We're knocking on the door of $101 a barrel. As we speak, the dollar is down 31, making new lows, and gold making new highs at $4.10 higher as we speak. So things are going to be focused on the outside markets, I think, from a overall trading attitude in grains. The idea of tight food supplies, tight supplies of ending stocks in corn. We've got a USDA report on March 10th, next Thursday morning at 7:30. The monthly supply demand numbers, they're going to be watched very closely. Is the USDA going to raise ethanol usage? Are they going to tighten supplies anymore? How are they going to play with the numbers? That's the big question that we got to talk about fundamentally. Some of the other factors, though, that we've got to be concerned about is it's the beginning of the month. Is funds going to come in and do some macro buying across the board here again? Or are they going to move positions out of grains and into the energy markets? All of those things has got traders extremely nervous. And you see a market like yesterday, we had a relatively narrow range comparatively to last week, and we continue to grind higher. And I think it's going to be very difficult to push the market down very much. There may be some times of profit taking in here yet, but overall tightness, energy concerns, the deployment of ships to the Mediterranean, the Libyan area, that could cause uncertainty, and I think will continue and should treat the grain markets in a positive note. Other news, weather in South America. We're hearing reports of too much rain. Some Brazilian ports were closed for a couple days because of the enormous amounts of rain. We're hearing 17-mile backup of trucks waiting to unload at these ports. But they're back in and open again from what we understand. So loading will get started again. These trucks back to the fields and hauling and moving grain. Harvest is beginning and in a full swing down in many parts of Brazil. We're also getting more reports on estimates of Argentina's crop, and it seems like every day or so another private forecaster comes out with a larger soybean crop now in Argentina. So things fundamentally are looking pretty good down in South America with a decent crop. And then we've got the battle for acres here in the U.S. and how many acres you see. The major focus, the major mover in the grain markets here in the last couple of days has been spreads. It's either buying soybeans, selling corn, or buying old crop corn, selling new crop. The wheat has been kind of following along with the rest of the trade and not getting much attention here. Some days they may be selling wheat and buying corn. So it's the spreaders have been the focus. We expect that to continue here over the next several days. In the livestock trade, we've got confusing issues as well. We've got cutout values of beef improving. Now that's improving because packers have slowed their chains down, reduced the number of hours of slaughter in order to help bring that margin together. Rich Nelson here in our office did some calculations on our model yesterday and showed that cutout packer margins anyway are $49 in the red, which is a huge amount, and they need to pull that together. The packing plants say, you guys got to buy cattle cheaper, sell the meat higher. We got to get these margins in line, and that's providing support to product. But on the other hand, they're still at a standoff in the cash market. And we expect packers to wait until as late as they possibly can this week to buy cattle. It is the beginning of the month. There's some contract cattle that can be pulled in at lower money more than likely, so that should help improve that margin. But on the other hand, the cattle, the futures under pressure and fund selling that we seen yesterday, if that would continue, that's going to change the attitude of the packer. It also will change the idea of the feedlots that they can get steady money at least this week. So those are some things that affect the cattle market. We need to find support here today in the futures in order to hold this cash market together, we believe. In the hog trade, we've got the market there came under pressure as well. Fund trading, technical trading, the price relationship between poultry and pork is very wide right now. Pork is overpriced in relationship to poultry, and that's taken some of this demand away. And we have been pretty aggressive producing pork here in the last several months, so that will that's going to keep some pressure on the hog market for a little bit. We are in some seasonal periods here where normally we get a bit of a setback, so watch that very closely. Don't be surprised to see a little more pressure in the livestock trade over the next couple weeks. So if you got any questions, give us a call. We want to continue to remind you that we've got the Allendale Prospective Planning Survey that we do every year. We've done it for 22 years now. We need your help. Go to the website, fill out the short survey. We're going to do this for another 10 days here, and then we'll give you the final report and release of this information via a webinar on March 16th at 10 o'clock. You can log on, get on live, and get the information. So all the details about this are right on our webpage. Take a look at it. Please help us. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.